Hey, welcome. Today, we are going to cut right through all the noise surrounding crypto investing. Our goal? To build a smart, safe, and educational foundation for anyone looking to get started. Think of this from a financial advisor's point of view. We're all about long-term strategy here. So whether you're just a little curious or you're actually ready to make a move, we're going to build this foundation together.
So, does this question feel familiar? You've heard about Bitcoin, you've seen the crazy headlines, and you're thinking, what's all this about? But then you see thousands of different coins, you hear all this complex jargon, and it's just easy to feel completely overwhelmed. Trust me, you're not alone. That's pretty much where everyone starts. And that feeling is exactly why we're here today. We're going to lay out a clear, secure path forward for you. The goal isn't to get rich quick or to chase the latest internet hype. Note, it's to understand what you're getting into and to make informed decisions, just like you would with any other serious investment.
So here's our roadmap for this explainer. First, we'll tackle the absolute basics, the what and the why. Then, we'll map out the market so you know who the big players are. After that, we get practical, choosing your tools and making that first purchase. And finally, and this is the most important part, we'll talk about a strategy for long-term success. All right, first things first. Before you even think about putting a single dollar into anything, you have to know what it is you're actually investing in. So let's break down the core concepts.
So at the very heart of pretty much every cryptocurrency is something called the blockchain. The easiest way to think about it is like a digital accounting book. But here's the magic trick. This book is copied and shared with thousands of computers all over the world. And because everyone has a copy, no single person or company, not even a bank, can go in and secretly change the numbers. That's what we mean by trustless. You don't have to trust a middleman, you just have to trust the math and the network itself.
Okay, and this is a really big one. Investing in crypto is not the same as buying a stock. It's a totally different ballgame. When you buy a stock, you're buying a tiny piece of a real company, right? It's regulated and you can only trade it during market hours. Crypto? It's a whole other world. The markets never sleep, it's largely unregulated, and you're buying the digital coin itself, not a piece of a company. This makes it, by definition, a much more speculative kind of asset.
Okay, now that we've got the basics down, let's zoom out a bit and actually look at the market itself, because understanding who the big players are is absolutely key to making smart choices.
The very first thing you need to notice about the crypto market is just how top-heavy it is. You've got Bitcoin and Ethereum. These two are the undisputed giants. Together, they make up around 70% of the entire crypto market. All those thousands of other coins you hear about, we call them altcoins, they're all fighting for a piece of that leftover slice. For a new investor, that tells you a lot about where the stability and the money are concentrated. So why are these two so dominant? Well, it's because they do fundamentally different things. People call Bitcoin digital gold. Why? Because it's scarce. There will only ever be 21 million of them, period. So its main job is to be a store of value. Ethereum, on the other hand, is more like a world computer. It's a platform that developers can build on top of. They use things called smart contracts to create decentralized apps, or dApps, for everything from finance to gaming, all running without a company in charge.
You're also going to hear people talk about how these networks actually work. Bitcoin uses a system called proof of work. You can think of it as a competition where miners use incredibly powerful computers to solve complex puzzles to validate transactions. It's super secure, but man, it's slow and uses a ton of energy. A lot of newer projects like Cardano use something called proof of stake. Here, instead of miners solving puzzles, users lock up their own coins as collateral to help validate transactions. It's a much greener, more energy-efficient way to keep the network running smoothly.
Okay, enough theory, let's get practical. To buy crypto, you need what we call an on-ramp, a way to get your regular money into the digital world. And that on-ramp is a crypto exchange. Just think of it like a specialized bank or a brokerage designed specifically for digital assets.
Now, before we look at specific exchanges, you need to know about two little words you'll see everywhere: maker and taker fees. A taker fee is what you pay when your order is filled instantly. You're taking liquidity off the market. A maker fee is usually lower, and it's what you pay when you place an order that doesn't fill right away, which means you're making or adding liquidity to the market. Taker fees are almost always higher, so knowing the difference can really help you manage your costs.
So let's look at a few of the big names. As you can see, their fee structures are pretty different. So if you think you're going to be trading fairly often, a lower maker/taker fee on a platform like Kraken might save you money. But if you're just starting out and you just want pure simplicity, maybe a flat fee like Upholds is easier to wrap your head around, even if it is a bit higher. It's all about finding the right fit for you and your strategy.
All right, you've done the homework, you've picked your exchange.
Now what? Now it's time to actually take that very first, very small, and very prudent step.
Now, here's a huge misconception that stops a lot of people. They look at Bitcoin's price and think, well, there's no way I can afford that. But that's not how it works. Just like with stocks, exchanges let you buy tiny little fractions of a coin. You can buy $50 worth, $20 worth, heck, even $5 worth. This makes it super accessible to just dip your toes in and learn as you go.
So, the process is actually pretty straightforward. Step 1, pick your exchange. Step 2, create your account and, I cannot stress this enough, turn on every single security feature they offer, like two-factor authentication. Step 3, link your bank account and fund it. And Step 4, go ahead and make that first small purchase of a well-established coin. And that's it.
Okay, this brings us to our final section, and honestly, it's the most vital one. Look, buying crypto is the easy part. Investing successfully and safely over the long haul, that takes a real strategy.
Listen to this piece of advice from analyst Nick Puckrin. That temptation to make a quick buck on some random meme coin is powerful. I get it, but that's where most new investors get absolutely burned. The professional advice couldn't be clearer. Stick to the established blue-chip projects and live by the golden rule of speculative investing. Never invest more than you are truly prepared to lose.
So how do you even spot one of these so-called blue-chip projects? Well, here's a simple checklist you can use. First, look for a big market cap. Let's say over $5 billion is a good starting point. Then ask yourself, does this project actually have a real-world use case, or is it just hype? Is there enough trading volume so you can easily buy and sell it? And finally, is the network it's built on secure and battle-tested?
And that brings us to the core mantra for how to survive and thrive in the crypto world. If you walk away with nothing else from this explainer, I want you to remember this. Start small with an amount you're totally comfortable with. Make your security your absolute #1 priority. And always, always do your own research beyond what you see on social media. Look, this isn't just some speculative casino game. It's the very frontier of a new kind of financial technology. And if you focus on education, on strategy, and on security, you can explore it in a prudent way. So the real question is, what's your first well-researched step going to be?
Thank you for watching this video. Please subscribe this channel.